I think that one thing I read is that it's more like you should start recording and try to make it more natural so that
Yeah.
it's not as
Yeah, like go.
overly formal. Like, hi, welcome to Michael Faye's podcast. That kind
Yeah.
of stuff.
Yeah. That's a
Anyway,
good idea.
so welcome to Michael Faye's podcast. This is an experimental thing I'm just going to do, and the goal is to just like bring people on board that are friends of mine who work in the crypto or the finance industries, and just talk about what got them there. I think one thing I'm trying to do with this podcast and also my newsletter in general is to be more open about the challenges that we as founders all face, that just people in general face in the finance and the crypto industries as they progress through the world. Because for me, my biggest lesson learned has been really trying. I started as someone who was really in this industry for extrinsic reasons. I wanted to get to some point of time where I would make this much money or this much status. But over the last couple of years, as Hummingbot has grown, I've realized that I'm in this game for intrinsic reasons, because I want to build something that's truly going to democratize trading and give this technology that used to be in the domain of Wall Street to everyone in the world and all the things that can enable. And so I've been on this personal journey myself, and I'll share that later. But I also wanted to bring on this podcast other folks that I know well who've helped us along, like Evgeny, who've kind of followed a similar path. And because I know that there's so many people out there, whether you're in finance and you feel like you're stuck in some corporate job, or you're in crypto and you feel like you're making all this money, but like, what is it for? Like, it feels very, kind of like, transient and kind of like, just like for nothing. And so I wanted to try to bring some inspiration and balance, hopefully, because I think Evgeny and I think we're a bit older, maybe than some of the other folks in crypto. We've been through the ringer, and we're here. So hopefully we can, by sharing our experiences and just try to be open about where we are, we can help other people in our industries and others find themselves. So yeah, that's a goal. But overall, we're also going to just shoot the shit about stuff in DeFi and crypto also. So anyway, welcome to the show, Evgeny.
Thanks, Mike. Yeah, it's always good to be here.
Yeah. So I guess like my first question, I guess. So I'm gonna go deep because I'm taking some inspiration from podcasts I really like Justin Kahn's podcast and this podcast called Acquired, where they do like hour-long shows with people. So I hope you don't mind, but can you tell me like like about how where were you born and what was your life like as a kid?
Yeah, that's a good question. So I was born in the Soviet Union, which contradicts a little bit my career in finance and then in crypto. And can't really complain. It was a weird but happy childhood, so that was all fine. I guess
Where in the Soviet Union were you?
Moscow.
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 Okay, got it.
Yeah. So I still kind of witnessed a few years
Yeah.
of the Soviet Union life, and then kind of transition of that into the market economy.
Yeah.
And
Was that pre in the Gorbachev years then? Were you?
no, it was mid late 80s.
Right.
So
Right. Yeah.
I mean, I didn't really reconcile any of that as a kid.
Yeah. Yeah.
Uh,
Okay.
but it kind of that's where the origins lie.
Got it. Interesting. Yeah. And so like, and did you go to like a university in Russia as well, or I guess
Mhm.
like were you there for the whole transition to Russia
Uh,
and everything else?
well, some of it. So yeah, I did my bachelor degree over there, and
Hmm.
then I was just lucky enough to get a scholarship which paid for my master's degree in London. So I've actually spent basically more than half of my life in the UK,
Got it.
where I'm currently based.
Okay.
So yeah, I kind of got both types of education.
Oh wow. Okay. So actually, tell me about your college experience actually, because you said you were at university in Moscow, and then you got a scholarship to study in the UK. Then, what were you studying in university?
So my bachelor was in economics, and then my master's was in finance. And I
Mm,
guess the main two differentiating points between the two countries and the two systems is that the first one was very heavy in maths,
yeah.
probability theory, all of that stuff. And then the UK one was very kind of applicable to traditional finance, right? To
Interesting.
corporate
Okay,
finance,
got it.
it's very
Oh.
applicable, much less theoretical.
Okay. Actually, I love to drill down into maybe like your experience in Moscow learning finance there, because I guess maybe like why did you learn finance in the first place? Like it's I'm sure that you could have gone down the engineering path or the medical path or other path. And
Well, I honestly, when I look back, I think that was, economics was the only option because I get scared by anything medicine related. And I'm not sure I have, enough capability to be a
yeah.
physicist or something. But, speaking more seriously, I've, since kind of pre-university days, I've been inspired by the financial markets
Mm,
because I saw them as a puzzle, as an ultimate puzzle to solve. Right, as a kid, I was a huge fan of Sherlock Holmes,
mm,
so I was, reading those stories, thinking one day I'll be solving all these puzzles.
mm,
And when I was a kid, I couldn't fully comprehend what finance was, obviously, but to
mm.
me, it felt like the ultimate puzzle. Having watched some movies, probably, or that
Yeah.
sort of thing.
Did you go through like was there like inflation, or were there like kind of like financial, like did finance like impact your life when you were growing up?
Um, so when I was a kid, it was a very heavy, financially heavy time for
Mm,
for everyone in kind of in that part of the world. But as a kid, I couldn't comprehend again what was
yeah.
going on. So you just kind of you were used to celebrating little things,
Yeah.
and then you just take certain things for granted, that you have to stay in the queue for to buy some bread,
Mm,
or what have you. So nothing truly dramatic, but
mm.
it kind of resonates with you that different countries can live very, very differently.
Got it. Got it. No, no, that makes a lot of sense. And actually, so for me, I guess like it was like my dad worked on Wall Street, but
Hmm.
he had gotten there kind of like we were pretty poor as a kid because he was studying physics in grad school, and then suddenly he had this job working for a hedge fund, and we kind of like kind of became like like upper middle class for the first time. And for me, it was kind of like, and I think looking back, that was one kind of like one reason why I got in finance, because I kind of saw it as like that was our lifeline out of poverty almost. And so because my dad, had built his career there, I wanted to kind of follow in his footsteps, if you will.
Makes sense. No, I guess I'm the first person in my family to kind of work in finance,
Mm,
like in,
okay.
in finance that we think about, right?
Right.
Investment
Right.
banking, that sort of thing.
Yeah. Yeah. So you mentioned that when you were in university, the finance you learned was very like, was it like theoretical? Was that the right word, or
Well, it was very mathematical, right? So it was a lot of maths,
interesting?
and then when it
Mm,
comes to actual finance, it was extremely theoretical because people
right.
who were teaching you, they were quite elderly, and they've never actually worked in real finance, so
Yeah.
they were teaching pretty much the same stuff they were teaching, back in communism.
Okay. Okay. Uh, like the discounted cash flow, DCF, like, and or
I don't think I learned it in university. No,
okay.
yeah.
Okay. Yeah, communist math, communist finance. I'm not sure what that is actually, but I'm kind of curious. It might be applicable again. Who knows?
Well, it's not too dissimilar to DAO, right? Where it's kind of
Okay.
it's for the
Yeah,
people.
that's true. That's true. Yeah. So was it like a big like culture shock, kind of going from Moscow to London?
Well, not really, because we all grew up on the same, Hollywood movies, so you kind of
Mm,
expect to see certain things. And
mm,
personally, I remember, saving up like $100 that I won in some competition or something. And
mm,
when I was still, I don't remember how old I was, but very young, just opened a brokerage account. So I
mm.
started trading stocks, and I remember my first trade, I lost $2, and I was
Right.
devastated.
Yeah.
So that was extremely educational. And
Was that in Russia, or was that in the UK?
yeah, that was in Russia. I mean, you can't really
Oh
open,
wow. Okay.
$100 anywhere
Yeah.
else.
Yeah. Yeah.
So that was very educational, and that teaches you more about how finance works than university. So,
Yeah.
by the time I came to do my master's, I felt pretty comfortable with how everything works.
Okay, got it, got it, got it. So you did masters in finance as well, yeah. Tell me about, like, I guess, like, because um, tell me about the job hunting process actually, because I want to learn about this because I went to Wharton, and which is also an undergraduate business school, and so I actually went there for undergrad. So it was like, and I always felt it was like it's a very like regimented path out of those kind of institutions. So maybe I'd be curious, like, when you thought about what to do afterwards, what were your kind of career exploration options?
Yeah, it's actually a very good question. I've always been a little bit stubborn, and I wanted to do, if someone is doing something in a certain way, I wanted to do the opposite way. So
Okay.
when I was doing my master's, all of my friends were applying to investment banks
Mm,
to either do M&A or to do sales trading, and I deliberately did not want to go down that path out of
mm,
principle, I guess, and I
yeah.
wanted to be on the buy side. So as you obviously know, the path into hedge funds is much less structured
Mm,
than into graduate programs into big banks.
mm,
So I think I basically had to do research. I still have it. I wrote down a list of like 200 firms in
mm,
London, and I figured out whom to apply to, and I just basically was sending cold emails and
mm,
then following up with cold calls,
mm,
which was a very painful experience,
mm.
uh, but it was probably one of the most educational ones I've ever done.
Okay, nice, nice. Yeah. So you were at so you were at a hedge fund, and then so I guess like so tell me about like when you first started working in hedge fund. What did they? What were you doing there? Like, what do they have you do?
I was an equity analyst, so my job was to do basic research on some specific European stocks and do
Okay,
some basic models. So
yeah,
the average thing you would expect an analyst to do.
yeah, got it. And were you living in London as well at the time,
Mhm.
or that? Okay,
Yep,
got it.
yep.
Got it. Okay, got it. And how old were you when you were starting that job?
Uh, 21, I think.
Okay, okay, that's actually, yeah. So was that like your first time like living on your own in London and everything?
No, I was 21 when I finished my master's and started my
Okay,
job.
got it.
Yeah, I
Got it.
moved to London to the UK when I was 19, I think.
19. Okay, got it. Okay, got it. Got it. Cool. Okay. So then, so you worked at hedge fund, and then yeah. So tell me, what year was that? I guess went into
That was 2010.
10. Okay, so it's after the crisis. Then after the crisis. Okay, got it.
Yeah, yeah, yeah. Well, it was after the crisis, but it was
Yeah.
in the middle of the European one.
Oh, right. Okay. Yes. Okay.
So,
That.
yeah, the last
Right.
decade
Yeah.
quite eventful.
Yeah. 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 So did that affect your job search? Like, were you was it hard to get a job because of the whole environment going on at the time?
Well, I think it's always hard, right? I think if someone is graduating today, it's
Mm,
also going to be hard. It's always hard, but it definitely felt hard at the time
yeah.
because, yeah, I mean, especially because we were benchmarking ourselves to people who were just a few years younger.
Yeah.
It was
Yeah.
much easier. So
Yeah.
yeah, it was a tricky timing, especially in the hedge fund world, because obviously the last decade has been very difficult to act for active fund managers,
Yeah.
and it's a declining industry, right? So if you just
Yeah.
look at the statistics, the number of funds 12 years ago versus today, it's a very different story. So
Yeah. Yeah. Yeah.
yeah.
Yeah, but I think the point I'm making is more like I think your journey, kind of going, being born in Moscow, getting and going to university, getting a scholarship to go to London, and then actually getting a job at a hedge fund, in the heart of the financial crisis. Like it's like one in probably 10,000 or more, of all the folks in the world who want to do it. And so it's more like I think, and honestly that to me is like the promise of crypto, that anyone in the world can do that job, do that hedge fund job, but they don't necessarily need to kind of work at a hedge fund to do so. Yeah.
Yeah, that's exactly right. And to be honest with you, everything comes down to it's a numbers game, right? So I remember talking to people who, for example, could not get a job, and they would complain
Mm,
about it, and I would ask them how many places they applied to, and they would say 5 or 10.
mm,
So then I would tell them that when you also apply to 200 places,
right.
then you can
Yeah.
complain.
Yeah.
So
Yeah. Did
it's
you? Yeah. Did you apply 200 funds or? Oh wow. Okay. Yeah.
yeah.
How did you apply? How did you do you write like individual like cover letters, or how do you?
Yeah, I mean, obviously you end up doing a lot of copy paste, of course,
Yeah.
but
Yeah.
yeah, it's you pick a specific firm, and a lot of these funds they don't even have the
Mm,
careers page, so you have to
mm,
do some research, figure out who their
right.
employees are, and pick someone
Yeah.
and send them a cold email and take it from there. Yeah.
Yeah. No, that's no. I give you a lot of credit. That's really scrappy because I mean, when I got a job, it was like we had a career center, so I just dropped a few resumes in the slots, and got some calls, and I really didn't do any work, to look for outside the box, things like that.
Yeah.
So I really commend you for knowing what you wanted, which is a
Um,
job at hedge fund and finding it.
yeah, thank you. Well, there was no, yeah. I tried it the easy way. It did not work out, so I had to, I had to do the hard way.
All right, so how long did you stay at the hedge fund for?
For about 3 years.
Okay, yeah,
About three
yeah,
years.
got it.
And
Yeah,
I see someone made a comment that reminds of a movie, Pursuit of Happiness. So I was actually watching that movie like almost every week for inspiration.
okay,
Uh, so it's
really.
important to find
Okay.
things that inspire you, because otherwise it's good.
You mean because was that because you felt you weren't getting that kind of inspiration from your
Well,
work or from
I,
your
I applied to 200 places and I
yeah,
got two job offers,
okay,
which means that I got 198
yeah,
rejections. So when you get to rejection number 100 and you don't
yeah,
have an offer yet, suddenly you're not
mm,
very excited anymore.
yeah, that's true. No, that's but you powered through. You went to 200 applications and you got two offers from that. Okay, got it.
Yeah, yeah, which is not a great statistics if you think about it. One in a
Yeah,
hundred.
yeah. But hey,
But
you got two. You got two, right? And, well, it's I mean that is kind of like it's that's also the VC startup pitch ratio too. That sounds similar
hey,
to
yeah,
the
yeah,
fundraising pitch to term sheet ratio too. Yeah,
exactly, exactly. It's exactly the same. Yeah.
yeah. But yeah, after 3 years of the hedge fund, like what made you want to leave, or was that natural? Did everyone kind of like leave after a few years?
It was just natural, that company was kind of evolving and changing strategy, so it was time for me to kind of to go and do something else.
Mhm.
And yeah, so just had to move, and I joined, kind of went into banking.
Right, right. So were you covering at the hedge fund? Were you covering like a specific sector, or were you like a journalist?
It was like a pan-European fund, so
Got it.
basically a bit of a generalist, doing long-short equities
Mhm.
across various countries and various sectors as part of a broader team.
Okay, okay. And then you moved into private banking, right? Or is it?
Yeah, so I kind of stayed on, kind of on the buy side.
Mhm.
So yeah, I went into UBS to work as an investment
Yep.
advisor, investment manager. Yeah.
Got it. Got it. Oh, cool. So, and so I guess because I imagine a lot of people listening might be in crypto, might be younger. So, can you maybe explain the difference between like working at a hedge fund, which is like I think like pretty standard. Like, I think people know it's like basically doing research and trying to decide what to buy and what sell, versus working as an advisor. Like, is it more of like an advisory role? Because I think that like that's a difference. I think yeah, it was a
Yeah,
difference.
that's right. It's a little bit different, yeah, because in a hedge fund, the business and your team have a specific strategy, and you have to execute, with like a sniper precision. And
Mhm.
then when you work, let's say in a private bank, and you have to give advice to your clients, you get exposed to much broader universes, because a specific client can be interested in Japanese stocks, a specific client is interested in Brazilian real estate, someone is
Mhm.
interested in commodities, so on and so forth. So you end up covering a lot of different things, and you become much more of a generalist and asset allocator rather than a stock picker. And I think that's the key difference,
Mhm.
that in a hedge fund, your job is to pick the best stock, to oversimplify,
Mhm.
and in a bank, you're basically advising the client to allocate their assets across asset classes, and you think in top down terms rather than bottom up terms.
Mhm. So,
That would be the main distinction, probably.
right. Got it. So what was your job at UBS? Was it advising specific clients, or was it kind of like a more of like a strategist?
It was basically giving clients investment advice, right? So
Mm,
someone would come and say, "Hey, I sold my business. Dear UBS, please advise us how. Please advise me how I should invest my capital, right?"
mm,
So then you have to spend time with people to understand the risk profile and what is appropriate for them, and then you help them design the investment portfolios, and then you basically help them manage it.
right. Yeah. Cool. Well, yeah, and I think that's when we met, right? When you were still working at UBS,
Mhm.
you were kind of getting involved in angel investing. Yeah. So tell me about that. Like, I guess yeah, what led you down that path of like, I guess, whether angel investing or crypto or like kind of, started the journey that led you to where you're at
Yeah, I
now?
guess. Well, as we know, the last decade has been very difficult for the financial industry. It was, compression rather than expansion,
Yeah.
and therefore, as an employee, you end up much more focused on risk management, on protection, rather than thinking about the upside. And when I say upside, I'm not referring just to the financial upside. I'm just referring to, I guess the freedom to improvise and do non-linear things. So I was just kind of trying to educate myself about something I knew nothing about. I did
Mm,
an online course at Stanford about innovation and entrepreneurship, I think, and started learning about fintech, which eventually got me into the blockchain universe. And I
mm.
thought, I know from experience that the best way to learn in finance is to lose money, and the best way to lose money is to invest into something you don't understand.
Right.
So that's kind of how my journey started. I invested in a few startups,
Okay.
not a very successful pattern,
Okay.
but that got me to blockchain in
Okay.
about 2015, 2016.
Okay, got it. Actually, so I'd love to drill down into that a bit more because I think a lot of folks have started dabbling in angel investing. I actually started around the same time you did. Like I invested in startups. I'm always curious to learn like about your first investment. Like how did you find and how did you kind of like make that first investment? So do you mind telling me about that?
Yeah, actually, so I'm thinking back about my first one. Well, actually, it was, my experience of cold calling and trying to get a job taught me about being to be very systematic in
Okay.
what I do. So I thought, okay, I want to learn about fintech and blockchain, so I should go to every single event and conference, that I could find.
Mm,
And I went to a blockchain meetup, which was 2015. So you can
mm.
imagine, right? It's like 10 people there, and there was a panel,
What were the
and
people like? Were they like were they the hippies or are they like all
no, it was very, I don't even remember. It was very random, right? So I think
okay,
you had like people like me who like felt lost because
right.
you leave your, it's 6 p.m. You step out of the bank and you go and listen about blockchain. You're like, what the hell is going on? And you had some clearly Bitcoin maximalists who already made it at the time
Oh
in
yeah.
weird jackets and beards. It was a very funny crowd.
Okay.
Yeah,
Yeah.
very funny. And then there was a panelist who just captured my imagination because she was extremely articulate and just clearly she knew what she was talking about.
Mm,
So after that, I just reached out. We spoke a few times, and
mm.
after a while, I ended up writing a small angel check.
Okay. Awesome. And did you remember what she was building or
No, well, I remember it very well because not only did I invest in this company, I then worked there as
Oh,
well
okay.
for a
Okay.
couple of years. Yeah,
Okay.
it's a blockchain. The company is still doing well to the day. It's called Everledger.
Okay. Oh, okay.
Yeah, it's one of the early kind of blockchain startups,
Got it.
tracking physical goods, IoT stuff.
Okay.
So yeah, I wrote a check, and then we kind of stayed in touch, and then I actually joined the company and worked there for a couple of years.
Oh, I see. Okay. Got it. Interesting. Okay. Interesting. So you actually invested in, so you actually wrote the check and then then you left UBS to work for Everledger.
Hmm.
Oh,
That's
okay.
right. Yeah.
Okay. Got it. Interesting. Um, cool. So yeah, tell me about that experience. So I guess like so you actually basically made the leap as in or 2016 then or 20
That was late 2017, early
okay.
2018. So
Got
it
it.
took
So
me about a year or so to
yeah,
get,
yeah.
to
Okay.
get more comfortable.
So you actually invested and then after a year or so, then you joined the company full
Yeah.
time. Oh, okay, got it. Interesting. Yeah. Tell me like what led you to that? That must have been a big decision, right?
Yeah, it was pretty
Do that.
scary. It was pretty scary because you're living a very kind of comfortable 9 to 6
Yeah.
kind of lifestyle,
Yeah.
and I was convinced that blockchain is the future,
Yeah.
but after 2017, I was very kind of upset with all the
Mm,
ICOs and all the scams,
mm,
and to be honest with you, I didn't really have the conviction that you could build viable businesses on the blockchain.
right.
There was just too much noise and too much trash, basically.
Yeah.
So I thought I do want to be in the blockchain, but I feel a bit scared to jump straight into. There wasn't even anything specific to jump into
Yeah.
at the
Yeah.
time. So I thought I should go into a business where I understand the business model, feel very comfortable with the founder,
Yeah.
and it's basically
Mm,
enterprise blockchain. So that was kind of my thinking.
Right. No,
which
no,
yeah.
that totally resonates with me as well, because that was when we started the company that built before Hummingbot,
Mhm.
and that back then I remember like we could have done a token easily. We could have raised like 50 million in token sale, but I always felt like it was kind of like I had no idea what we would do with that money, so we only ended up raising like 700,000. And then like basically like just a few million in 2018 for Hummingbot, but I think it's kind of like I felt like there's so many. I saw so many people around me taking that path and just like raising capital for all kinds of weird stuff, and I was like, part of me, I was like, should we do that? But ultimately, I'm glad we didn't do that.
Why?
I would say I think that I felt back then, and I'm sure of it now. Actually, I'm even more positive now that more money actually hurts you. It's like there's like essentially there's a negative marginal kind of
Hmm.
like like a cost to
Yeah.
basically the more capital you raise, and I see this because I would say a like you're basically setting a higher level of expectations for the next time. And also it's almost like the more capital you raise, the better your product has to be when you launch it. And so otherwise, so it's almost like if you can't start smaller and just iterate from there on out. And I've seen this because I feel like some of the projects who've raised the most capital in that 2017, 2018 period are the ones who, I mean, frankly, haven't launched anything, truly meaningful.
Yeah.
Like, Definity, Filecoin, Oasis. I mean, I think they're launch. I think I think they're good people trying to do good stuff, but I feel like the amount of capital they raise is like almost like an anchor that's like holding them back.
Mhm.
So
Yeah, I think I actually agree with you. Yeah, I think it makes sense.
yeah, yeah. So your Everledger, and can you explain more what Everledger does? Because I think the fact it's still around is that it's a great sign. So then they must have be doing something right.
Yeah, the company is doing something right. So yeah, the company is basically um, tracking physical goods and creates their digital representation on the blockchain,
Mhm.
so that you can scan a diamond, a bottle of wine, a hoodie, or whatever else,
Mm.
and you scan it with your phone, or doesn't matter what you scan it with. It tells you the story, it tells you where it comes from, it tells you the origin and the provenance and any other important details you wish to track.
Mm.
So these days it would be a fancy kind of physical NFT sort of
Mhm.
narrative. Back in the day when NFTs weren't a thing, we were
Right.
just kind of doing it. And yeah, the company has done a lot of good and interesting projects around the diamond industry,
Mm.
apparel, electric car batteries. Because when you buy a diamond, people want to know if it's coming from an ethical origin or not.
Right.
If it's buying a hoodie, like imagine you scan your hoodie when you put it on, and it tells you about some events or marketing content, and and it turns physical goods into collectibles. So there were a lot of amazing use cases
Mhm.
across very different industries. So it was extremely educational, but just really, really early.
Right. 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 Got it. So do you think they've like I said, found like product market fit? Are they do like a business model now that's repeatable?
Yeah, well, the product market fit existed 4 or 5 years ago,
Mm.
because the company started around the diamond industry,
Mm.
and
Okay.
it was immediate traction. It took a while to build everything, obviously, and to get
Right.
projects sorted, but
Right. Right.
it got immediate reception and immediate traction
Got it. Got it.
across that industry.
I see. So its customers are the like the diamond companies then, or
Um,
the
well, I guess it depends on how you think about the customer, because ultimately the objective is to get as much data as you can about the physical item,
yeah.
right? So if you have the supply chain and you have different participants in the supply chain, you need as many of them as possible to give you the data, well, to put it
Right.
into the
Right.
blockchain platform. But the ultimate customer is the person who walks into the store and who wants to know what it is that they're buying.
Okay.
Uh,
Okay.
so
Got it.
it was a very interesting work experience for me,
Okay.
because you're building a map of stakeholders and you're trying to
Yeah.
convince them that there is value in what you're building,
Got it.
which is very
Is a thesis that I'm trying to break down like I'm a product person, so I like to break down things into like like distill them to product in a sense. So is the idea that the value comes from the fact that someone, if I know the provenance of this diamond, versus one that I don't, I'm willing to pay a premium for the one that has provenance, and therefore that premium, you can pay people downstream to provide that data. Is that what
So
it means, or?
that is one of the aspects of that, and the second is what is happening with the millennial generation is that people are making a conscious choice to
Mm-hmm.
be more ethical,
Right.
right, and to
Right.
buy ethically sourced goods which have a
Mm.
sustainability angle. So what can end up happening is that you, as someone who wishes to buy a specific good, you will go to someone who
Mm.
is positioning themselves as more sustainable.
Right.
So what is happening is that there is sort of a displacement where if you're not being sustainable, you may just not sell your items at all.
Got it. Got it. Okay, I see. I see. So it's more like the retail, and basically this is a way to like, and I as a manufacturer, I can't just slap a ethical label on myself. I have to prove that it is ethical, and therefore this gives me the ability to prove it.
Exactly, but then it goes beyond that, right? Because if there is very clear proof that your good comes from a specific place and it has a digital identity, it is easier to, let's say, buy insurance on that,
Okay.
or lend it out. So there are a lot of financial use case you can start building
Right.
on top of that
Right.
once you
Got
have
it.
the
Got it.
base identity data. So there are a lot of interesting use cases there.
Yeah, yeah, no, yeah, and I see actually. I think it's a really smart move actually to really focus on the diamond industry, because this is the kind of thing where I think it only works if you kind of, basically solve that chicken egg problem and kind of
Mhm.
own an entire vertical.
Mhm. Exactly,
Yeah.
exactly. So yeah, it was a
Okay.
very interesting one.
Yeah, because I remember I've heard of a bunch of other startups that had a similar model back in like the 2017
Mhm.
2018 time period, but I'm really glad that at least one of them has actually proven that it made it work, because
Yeah,
I do think it's a great use case for blockchain that hasn't really been made mainstream yet.
yeah. I agree. Well, it's not as sexy as NFTs. It's more
Yeah.
corporate. It's with a longer sales cycles,
Right.
and therefore it's a little bit less loud,
Mm.
but it's by no means less viable.
Yeah, yeah, and I think it's actually in some ways, yeah. It's I think to me, I'm more interested in blockchain as a technology. There's a loud NFT consumer kind, but overall, just like cloud computing and internet, like there's also the enterprise layer as well that
Mhm.
has benefits for everyone.
Yeah, of course. I mean, there is a variety of different use
Yeah,
cases that are
yeah,
valuable.
yeah, yeah. Cool. So let's get into more, I guess, like kind of like what led you to actually starting Re7 Capital, because you were at Everledger, I think, and then at that point that's when you invested in Hummingbot, right? Like,
Mhm.
is that okay? Yeah, and tell me about that actually. How did you like I don't really know the story, but can you tell the story of how you invested in Hummingbot?
Yeah, I was, by the virtue of working in a blockchain startup, I was obviously kind of staying up to speed with what's happening in the crypto land. And in late 2019, I started getting an inkling that something is brewing, in the on-chain world. And it was clear. I was monitoring the market very closely, not for trading or perspective or speculative perspective, but to me, it was a signal whether the industry would die or not die. And it became pretty clear that it is not dying. It's actually uh, building the base for the next uh, innovation leg up. And I started kind of doing quite a bit of research in DeFi because ultimately, as I mentioned, since I was a kid, I was always excited about finance more than anything else.
Yeah.
So when I heard about this, thing called DeFi, I totally fell for the marketing gig. Right, it's to me
Right.
it just made so much sense, and finally I could feel that there is a use case on chain, in the public chain, where you can do something around finance. And I was kind of learning about what's going on, what's happening there, and then we were lucky enough to get connected. And yeah, when you told me kind of what Hummingbot is doing, it just felt like such a no-brainer immediately, because having seen it on the enterprise blockchain side and
Mm.
public blockchain side, um, ultimately blockchain just democratizes a lot of things, and it gives access to people who otherwise would not have access to something,
Mm.
or it makes something much 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 easier. And
Yeah.
there's a lot of value in that. So where anyone in the world can suddenly become a contributor, a participant, a market maker, a trader, or what have you, it's I don't know how you can not get excited about that.
Yeah.
uh,
Mm.
so to me it was an immediate kind of no-brainer, because I think we we only met face to face like 3 weeks ago.
Oh yeah, that was the first time we met face to face, right?
Yeah,
You know what? I don't even realize anymore because I feel like, yeah, in some ways I feel like Zoom is almost like I feel like I know people just as well over Zoom
yeah,
as I do in face to face.
exactly. But yeah, so that was my kind of I guess quickest investment, having not met the
Right.
person face to face in
Oh,
real
okay.
life.
Yeah.
So yeah, I was just very excited because you guys are
Mm,
basically building like an operating system
yeah.
for anyone to make it easy for anyone to become a financial market participant,
Right.
right?
Right.
Which
Yep.
could mean a lot
Yep.
of different things, but it's like an operating system for finance, right? It's
Yeah.
it's
Yeah,
like
yeah, that is what we're trying to build long term. But actually, I want to as I said in the beginning, no content marketing, including my humming bot. This is more about I want this podcast to be more focused on like the journey of like what
yeah.
got you where
So
you are.
yeah, so going through that journey, and well, the reason why is probably I'll say one last thing about Hummingbot because that
Sure.
was an important piece in my journey. Um, After we spoke and I read some of your materials, the term that really stuck with me was liquidity mining.
Oh,
And I was thinking about it a lot because, I was thinking through the 2016, 17, 18 crypto cycle. And I was thinking, who are the actual winners of that cycle? And when I say winners, I'm not referring to people who bought low and sold high, or those
mm,
who raised $1 billion and disappeared, to actual businesses, right? And these were people who serviced
mm,
the industry,
yeah.
right? Brokers and
Mm,
miners.
mm,
So when I heard this term liquidity mining, I started thinking, okay, well, in the previous cycle, we have this kind of Gen 1 mining, which is you mine electricity and you produce the blocks.
mm,
So could it be that in the future you can mine liquidity like you mine blocks and
mm,
you generate IRR on the back of that?
right.
So
Right.
that really is kind of stuck with me.
Mm,
And then with a friend we built an options arbitrage bot on Deribit, so we were
mm,
kind of just trying our feet, trying to build something
yeah.
that was interesting. And
Mhm,
through that we ended up using curve compound and other things.
mm,
So by yes, we got a little lucky with the timing, so we were active users in the space before the whole
right.
DeFi started. And
Mm,
then when it started, it was just like a renaissance, right?
yeah.
Then
Yeah.
to me it was like, okay, this
So you're building the Derby options bot and doing some experiments. Was that in like early 2020 or is that like
Yeah,
okay?
we started late 2019,
Okay. Hmm.
and I think it went live in like February 2020, or something like
Got
that.
it. Got it. And what were you just trying to just make trading profits by arbitraging
Yeah,
and
so
those kind of
the
things?
objective, the thesis was that the market could be very, very inefficient.
Right.
We know some things about option theory and
Mhm.
and some maths behind it. So let's just learn and try to do something.
Mhm.
So it was, I mean, obviously you have the hope of generating some payoff, but
Yeah. Yeah.
it was mainly to learn
Right.
rather
Okay.
than anything else.
Yeah, no, so but your timing was exceptional because that meant like because like DeFi summer really kind of kicked off in like probably June 2020. So I guess by then you had already kind of set up some systems and done some trades and set up some bots.
Well,
Or
not enough. Nothing is
okay,
ever
yeah,
enough in the space. But I guess what we did have some idea about the players in the market and
okay,
what they were doing and what the ups and downs were. Upside and downside.
yeah,
So I think we were well positioned from a knowledge perspective rather than anything else.
got it. Interesting.
Um, and then what really kind of caught my attention was the yield on compound with stable coins,
Right.
right? Because when it all started happening, you could make 70% in stable coins without
Yeah.
taking any price risk, just
Yeah.
sitting on compound. So that
Yeah.
just blew my mind
Yeah.
because it was clear the yields will not stay there.
Yeah.
But to me, it immediately resonated that it could be a whole new financial strategy that you can
Mm,
deploy around that. Like, where in traditional world can you take assets which are denominated, well, basically pegged to dollars,
mm,
and go and make 20% plus yields?
mm,
So I kind of started thinking, wouldn't it be amazing to run like a stablecoin fund and generate some yield on
mm,
on that? And I started doing some research into that, and back in 2020, I decided to not do that
mm,
because of the operational risks. So I was very scared that something can get hacked.
Yeah.
If it does get hacked, how do I prove to people
Yeah.
that it wasn't anything malicious? Because
Right.
they're not
Yeah.
going to read blockchain transactions. So what I did instead is I started learning about different custodial solutions.
Mhm.
And 6 months down the line, in a bit more than a year ago, it became clear that there are some custodians, again
Mm.
without any marketing, there
Yeah.
are some custodians that allow you to um, basically operate on the blockchain whilst keeping your assets with the custodian
Mm.
and having some compliance policies around that,
Got it. Got
which
it. Okay.
then de-risks you as the portfolio manager.
Interesting. Okay, got it. So it's like so there's like these compliance firms that basically does this only work for like on DeFi, or does it also work for like if you have like accounts on I don't know, Binance or central exchanges as well? Like, do they handle
Yeah, so
both? Or?
on Binance and other exchanges, there obviously it's a very well established industry, and there are a lot
Right.
of very big custodians that, of course,
Yeah.
allow
Yeah.
you to do that.
Okay.
But that offering did not exist for DeFi
Got it.
back in 2020.
Okay, but,
So
but
with
now
one
it does for DeFi, right?
exactly, so with one custodian, we had quite a few lengthy conversations. We gave them as much feedback as we could, and they launched basically a solution,
Okay.
which I think
Cool.
we were, if not the first user, but like one of the first institutional users.
Okay. I see.
Um, and that gave me the confidence to try
Okay.
and
Yeah.
see if a
Yeah,
fund
yeah,
could be
that makes sense. Basically, so you could like essentially offload the custodial risk onto an
exactly,
expert instead of you having to
exactly,
do everything. Yeah, yeah, and because
exactly.
like that's why like yeah, otherwise like yeah, if you're taking that risk, I agree. It's like as a fund manager, you basically have to build a bank, and it's like
Right.
you're not getting paid enough to build a bank. you know?
Exactly, exactly. One thing I learned about my 10
Yeah,
year career in banking is that never try to build a bank.
yeah. Yeah. Well, and honestly, I think this is actually one of the biggest things that I think we can teach new founders in the crypto space, which is it's kind of like it's kind of one of the reasons why banks and certain institutions like insurance and banking are so regulated is because of that kind of like that downside risk, whether it's getting hacked or those kind of things. And so
Mhm.
it's like, and so like a when you enter those spaces, you have to worry about those risks. But B, because it's a regulated industry, for those reasons, you have to worry about those regulations as well. So,
Yeah.
so I think in some ways, I think one of the lessons I learned and why we started doing Hummingbot this way is because we kind of like realized when we first started, we were building this like hedge fund protocol that was unfortunately even if it worked, it would have been highly regulated and also had a lot of custodial risk attached to it. Whereas I think when we switch to Hummingbot, um, honestly, I'm really glad we did so because now we're just building software. It's a tool that people use. We don't hold any assets of our users. It's up to them using the tool. And even
Mhm.
then, the company that we build around it is just a software company, which is not a super highly regulated space.
Yeah, because people need to understand that there is not, when people criticize the banks or what have you, people need to acknowledge that when you run a business in an extremely regulated environment
Mhm.
and you have to comply with a lot of
Right.
different things, it changes your mentality because your objective becomes protecting the risk rather than managing the
Yeah.
upside.
Yeah.
Because if you manage the upside, you can make X, but if you mess up and
Yeah.
you fail to honor the regulatory requirements, you will be fined 10x.
Yeah.
So the
Yeah.
risk reward is skewed in such a way that you do need to focus about downside management rather than upside management.
Yeah. 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 And I think my lesson, and I'm really glad you found it too. It's kind of like it's like there's ways to run a business, but you can kind of like take a piece of it, and outsource that to someone
Yeah,
else, and then that actually makes your life a lot easier and more efficient.
yeah, yeah, for sure. Otherwise, it's just impossible.
Yeah, yeah, and so it's almost like I agree. It's almost like that custodial solution almost enables you to launch
Mhm.
this DeFi focused kind of quant fund without having to spend half your time on security and operations.
Exactly, exactly, exactly. So yeah, then when it all became viable,
Mm,
um, I spoke to a few people about it, which
mm,
and it was very serendipitous because I didn't set up an objective to cold call 200 people to raise a fund.
yeah,
I casually mentioned it to one potential investor who immediately got extremely excited.
Mm-hmm.
which was a surprise to me. And then I thought, okay, well, if that guy's excited, I should talk to more people. And then within 2 weeks, I basically, well, maybe 3 weeks, I had enough commitments to, to start the process, which really came as a surprise to me because I thought it would take much longer to do this. But I guess it's a testament to the fact that, it's just very tempting to try
Yeah.
and get stable coins and generate,
Yeah.
decent returns.
Yeah. I think your fund is positioned very well for what I think a lot of like large investors are looking for, honestly, which is returns that are like stable, consistent, and kind of like basically like not safer, and so
Mhm.
because right now there's so many money, so many people with like lots of capital sitting around earning like 1%, 2%, so anything that's like 5% plus that's reliable is much better than kind of like the swing, and because they have their other stuff, they have their equities and other buckets, but that like fixed income bucket, they're just trying to maximize yield. And so I think your solution, and because it gives them the liquidity they need as well, right?
Exactly.
And that's how it's basically, it's almost like a cash alternative to people.
Exactly. It's a treasury management
Yeah,
tool, right? Where you have
yeah,
something that is supposed to not be volatile, should give you the yield. Obviously, there are a lot of risks. It's
mhm,
not it's not free money, but as a risk return, it seems to make sense to people.
yeah, yeah. So I guess like I don't want to get us in trouble. Obviously, we're not going to talk too much about your fund and everything else.
Yeah.
But I think that I do think that it's I think it seems like he's doing well. I guess would you
Yeah, well, again,
see?
to be fully compliant, it's not investment advice. The
Yeah.
fund is only for professional investors, so we're not trying to pitch anything here. But it's not been easy, to be honest with you. You
Mm,
you have some ups and downs as you learn, as you scale, as you grow the team.
mm,
But I would say we're pleased with how last year played out.
mm,
This year, I mean, the markets everywhere are horrible.
mm,
So the yields are still there, but they're harder to find. So what we end up doing is we end up innovating more, right? So we're expanding the
mm,
team to build more tools, to
mm,
build more bots, to build
mm,
more stuff, because the market is becoming harder. It's not becoming harder. There aren't any traditional players coming into the market just yet. So it's
mm,
still crypto native people, competing with each other, which
yep.
is not that much competition.
Mm,
But the market itself is a bit less giving and less generous, because when all the altcoins are down 80%,
right.
obviously,
Yeah.
what do you expect? So it pushes you you know, to hire more people to do more stuff. So you end up becoming a team rather than a group of one or two people doing something, and then it becomes harder for the newcomers to compete with you. So we're starting to see
Mm,
that as the market is becoming less generous, you need to become more professional to capture what you
right.
need to capture.
Got it. It makes sense. Yeah. So can you tell me about your team? Like how many people and where are they based?
Yep. So we're about 5 people right now. Um, m- we're all spread out across Europe,
Okay.
different locations, different countries. So it's remote.
Yep.
In the
Hmm.
we live in the age of Zoom.
Yeah.
Um, and yeah, most of my colleagues do kind of data science, data engineering.
Okay.
There is also one colleague of mine who is an analyst
Yep.
and helps figure out how to approach yield farming opportunities as well as doing some kind of
Got it.
modeling.
Okay.
But what we found is that this job is extremely data driven
Yeah.
because you're
Mm,
dealing with hundreds of projects across 6 different
right.
blockchains.
Yeah.
You provide liquidity to DeFi dApps, and
Yeah.
like as a portfolio, you have to be spread out across like 30 positions.
Yeah.
How do you manage it without
Yeah.
having some dashboards that you build for yourself?
Right.
It's
Right. Yeah. So actually, let's drill down to data, if you don't mind, for a second. 'Cause this is also one area that I think, like Hummingbot, and like I think people are interested in Hummingbot, or using Hummingbot are also interested in learning about as well, because at least Hummingbot right now we integrate with things like CoinGecko,
Mhm.
and we also pull data, have directly from like exchanges. Allow people to use that data, but I think I would say I think that like we've always like kind of like like also historical data is also one area that we could connect with, and but we just don't right now. What does the data landscape look like on the decentralized exchange side, or the blockchain side? Because now there's so many layer ones and layer twos and all these dexes. Like, where do you guys get your data from?
Directly from these protocols. So
Okay.
we wanted to use some product to just plug in and get everything we need, but it doesn't
Yeah.
exist. So we are deployed across 6 different blockchains. So
Okay.
we are using different, a variety of different nodes and different providers.
Right.
And
Okay.
my team spends their time writing scripts to connect directly to the smart contracts and run the scripts to get all this data into our database, and then we process it, and then we do some stuff with it. But
Got
it's
it.
really
Got it.
hard, and it's a lot of work.
Got it. And is that because is that data stored on chain, or is it like, can you audit the blockchain for it, or is this stuff that's not on chain?
Well, so the data we are gathering,
Yeah.
it's on-chain data.
Okay. Yeah.
So we're getting it directly from the blockchain. For our purposes, we are not storing it on-chain. We're storing it just in our
Right.
database because we
Okay.
don't need to, and it's easier.
Yeah.
But yeah, all the data. I mean, we're obviously also feeding some data from CoinGecko, but we care about
Mm.
on-chain data more
Yep.
than centralized exchanges data.
Okay. Okay. That makes sense. Yeah. 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 And yeah, I think what I'm asking is more like, I guess like, yeah, I'm surprised actually that there's no like kind of solutions for this out there, because mainly because like if the data is on chain, it's all historical, and therefore some vendor should be able to like take that and you know
Well, it's
create something.
gradually happening because you can
Yeah.
get there are some good providers of data here and there with some specific
Okay.
things, but as a professional fund, you kind of need some very specific data
Yeah.
points in a way how you need them, and
Yeah.
we just haven't found anyone who has that data, especially about around the yields.
Right.
Um,
Right. Oh, that's true.
so
Yeah. 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 So now I do think that, yeah, I think there's just a lot of like, yeah, overall, but my feeling on just like DEX trading in general is that I think many people from outside are focused on like, kind of like stuff like MEV and just like, kind of like basic, bots and those kind of things. But I think the reality is the stuff that people have problems with are much more basic. It's things like accessing
yes,
node infrastructure,
yeah,
making sure that you can manage wallets, like, between people and teams, just like the just sending assets from one blockchain to another, just like stuff like that, where it's like, it's very painful and manual right now.
it is. It is very painful. Yes.
Yeah. So I'm curious actually. So in terms of like, what are the tools you guys use for this? Like, do you have like, do you use like, do you have like a command, like, do you build all your own stuff in house, or do you use things like, I don't know, like I'm trying on the Ethereum side. Ethereum has more stuff built out for this. Like there's like command line tools like Seth, hard hat for smart contract deployment. But most of the tools I'm talking about are more like aimed at developers, like developers. But are there any like tools for like traders besides Hummingbot? But like, are there any trader tools you found that are helpful for trading on dexes?
No. that's that's
Okay,
the short
fair enough.
answer.
Yeah.
No, not really. No,
Okay. Okay. So
nothing.
the one tool I like is Tenderly. I mean, like, not for actually like
Yeah,
for,
sure.
it's more just like
It's not,
identify what. Yeah.
well, we use Tenderly quite a bit, but obviously it's
Right.
not for traders, right? This is a little bit
Yeah.
different.
Yeah. For
But yeah, Tenderly is great. Yeah.
yeah. Yeah, but I do feel like on the trading side, that, yeah, yeah, if you were listening, I do think there's a need for more tooling on the DEX trading
Yes,
side
please.
that people
Yes,
need.
please.
So yeah,
Yes.
and
I
so
can definitely, sign a petition for that.
yes, and so if you're a startup that's building yet another Uniswap clone, that might be a good direction to pivot into.
Yeah. Yeah. Agreed.
Cool. So I want to wrap up since it's the last section of the interview. So I've thought about like having like kind of like most podcasts, they always end with some stupid thing. It's like, oh, what are like 3 books you read, or something like that. So instead, I'm going to make everyone talk about 3 tokens they like. 3 tokens, like fungible or non-fungible. So
Okay.
what are 3 tokens that you like? But and also this is not serious. This could be like, you could like, it could be like banana coin or some shit like that. So it's really for shits and giggles. So 3 tokens.
Yeah, no marketing, obviously.
Yeah, no
Well,
marketing.
the serious one. I mean, I'm still, the thing that got me excited about blockchain and really got me into blockchain was Ethereum.
Mhm.
So it will forever be my personal favorite. no matter what happens to it, because I just I fell in love with the narrative of the space through that.
Yeah. Yeah.
Then okay, let's give one series and one non-series. The one that amazes me
Okay.
are these dog coins. I don't know
Like
which one is.
Doge and Shibu, like those are.
Yes,
Yeah.
Shiba
Shibu.
especially,
Okay.
because I
Interesting.
I still cannot comprehend how
Yeah.
you can take an asset and make it a
Yeah.
multi-billion-dollar asset when you know that it's created as a joke.
Yeah.
So
Is
I'm
there a team
genuine.
behind? Is there like a team behind Shibu, or there's like
I,
a?
I don't know. I honestly got no idea, but I'm just amazed because it's so far beyond my comprehension. Like
Yeah.
if you come to
Yeah.
me and say, Kenny, why don't you, here's a task: deploy a coin that should be worth $1 billion,
Right.
but you tell people up front that it's empty. I don't know how you do that. I guess that's a testament to TikTok, YouTube, and everything else.
Yeah. Yeah.
Probably.
Mhm.
And then what's the other one that could be serious? Well, I guess we can. Um, what would be the first? What's the most OG DeFi coin? Would it be synthetics? I guess. Or,
If really want to go OG, well, you can go like
yeah.
zero X before that.
Well, zero X. Yeah, exactly.
Zero
Yeah,
X, and
zero
then
X.
even before there should be even before that Augur, I guess.
Well, technically,
You
yeah.
know,
Um,
yeah, and I'm sure there's ones for Augur, but I think Augur, in my opinion, is probably the one that's still around. I guess that's the
yeah.
because they're prediction market, and
Yeah.
it does work. So
Yeah. So yeah, that's a good one. He actually did. I remember Ogre and what was the other one back in 2016? I don't
Bancorp,
remember.
yeah,
It was
yeah.
another prediction market. But anyway, yeah, that would probably be my
Gnosis, Gnosis
uh,
was the other prediction market, I think.
uh, possibly. I don't. I mean, Gnosis by now is just so much associated with the safe that it's
Yeah,
hard to think beyond it. But
yeah,
yeah, those OG coins from back in the day
yeah,
that still kind of that were trying
yeah,
to push the narrative of DeFi. Again, my
yeah.
heart resonates with them, even if they're not so much relevant anymore.
Yeah, yeah, no, I agree. Actually, I remember, I remember like, like I remember like, listening to interviews like Joey Krug from Augur, and like back in 2017. So I met Joey back then, and I mean, he's still like at Pantera, and I think, but when he built Augur, actually, it makes sense. Like what they built. It's just that I think, it's just it was like kind of almost like too early for the market, so to speak. So
Yeah, of course. I mean, everything was too early back in the day, right?
yeah,
But you can what another thing that I assume you will agree with is that it's impossible to get timing right.
yeah.
It's very hard to do that. So you just go for
Yeah,
it.
yeah. No, I totally agree. I mean, that's why honestly, I feel like that's why running a fund. If you're basically managing capital for other people, it's hard because, and I respect you doing that because timing, it's hard to get timing right. So you kind of have to just kind of like like only promise what you can promise. To your
Well,
investors.
yeah, that's why regulation exists so that you don't promise too much.
That's true. Yeah. Cool. Well, this is a great interview. I think, this is, I really enjoyed having you on this nascent, first
Thank you.
show. And yeah, I think, my goal here, I think I actually accomplished goal here, which was just to, try to, showcase your story, but also, outline like how other people can take the same journey that you have, which is, like you started somewhere that you're born in, a third world country basically back then, and you made it to a point where you're managing your own hedge fund, and I think to me, the power of DeFi is that hopefully everyone in the world can do that, from any country, just using the tooling and the technology of crypto.
I think so, and I think it's only going to become more accessible to people
Yeah,
as to
hopefully.
develops. Yeah,
Yeah.
and yeah, thank you very much for having me. It's always a pleasure, and yeah, I'm very excited for your new show.
Thank you. Thanks, Evgeny.
Yeah, thank
Oh,
you.
sorry. Oh, I forgot. I should do one last thing before I see this. So, where can people find you if they want to get in touch with you?
Sure. LinkedIn, Twitter, Telegram,
Yeah.
whatever. But there, so our we're called Re7, so Re7 Capital. So just Google us, and
Okay.
on our website we have a link to our careers page, to our Twitter, and everything else. So that's easy.
Re7 Capital. Okay,
Yeah,
RE7 Capital.
RE7 Capital. Yeah.
Okay, all right.
Yeah.
Thanks. Okay.
Thanks, Mike.